even as COVID cases begin to rise again. And let's kick things off. The benchmark indices ended with robust gains for the second straight day Thursday. Investors have made 6 lakh crore rupees in 2 days as markets extended their winning run. The Sensex and Nifty gained over 1% each in today's trade. The Sensex surged 874 points to shut shop a few points shy of the 58,000 mark. The Nifty too gained over 400 points in 2 days to end near 17,400 today. The showstopper of the rally today was big boy Reliance Industries. Amid heavy buying, the stock hit a lifetime high. This after Morgan Stanley raised its target price on the stock. The street expects a robust set of numbers from the company in the fourth quarter. The company's recent thrust on retail ventures also added to the up move. Besides RIL, Eicher, Coal India, Mahindra & Mahindra, Adani Ports, Kotak Mahindra Bank were the top blue chip gainers in trade today. Billionaire investor William Ackman has sold his stake in Netflix at a roughly $400 million loss as the streaming service's stock plunged following news that it lost subscribers for the first time in a decade. In a letter to shareholders, Pershing Square said that the loss on their investment reduced the Pershing Square Fund's year-to-date returns by approximately 2%. Ackman's decision to exit the world's largest streaming platform came 3 months after he amassed a stake worth $1.1 billion. Netflix recently said it lost 200,000 subscribers during the first quarter of 2022. They've cited password sharing as the main reason for the drop in paid subscribers. The streaming service has pledged to go after subscribers who are sharing passwords. Well, big news for entrepreneurs and company owners always wary of the red tape involved in winding up a company. Highly placed sources in the Ministry of Corporate Affairs have informed Business Today TV that simple norms for winding up of companies will be released this August. According to sources, companies where there is no settlement needed on assets, liabilities and loans will be allowed to wind up within 100 days, while more complex cases will be closed within 180 days. The current procedure is cumbersome and can take up to 2 years to complete. It also acts as a major disincentive for many industrialists who plan on expanding their existing businesses.
Well, you're right, but it's very important for us to understand that the exits actually happen in 2 ways. So the first exit is a voluntary exit that a company can choose, or the second one is through liquidation IBC that we all know. Now, earlier, if the company had to take a voluntary exit, it had to go through a lot of compliance methods and different kind of documentation, which would take about 2 years for them to wind up. And that's a longer time if you're also looking to get out of a particular business. But as you know, Finance Minister Nirmala Sitharaman had announced this in the last budget that they're trying to bring down this time to 6 months. Sources tell us that government is in final phase of drafting these norms. These are going to be part of MCA 21 version 3. It is actually the CPAC, which is Center for Processing Accelerated Corporate Exits, which will be a part of MCA 21 version 3 under the company law module, where government will give about 180 days for companies to make an exit and about 100 days for companies which are simpler in nature with no assets, liabilities or loans to look into. So I think that's a very big step for in order to cut down on unnecessary compliance for companies and startups.
Do you know the most trusted savings instrument in the country? The humble fixed deposit is now a loss-making proposition. With inflation at nearly 7%, you're actually losing money on every FD you invest in, especially with you being charged anywhere up 30% income tax on the interest you earn on every fixed deposit. So what are the options for an investor averse to risk? Someone who likes the security of fixed deposits, one who does not want the uncertainty of stock markets in their investment portfolio. My colleague Sakshi Batra brings you this special report. It answers some of those questions.
Well, the good old fixed deposits are not so good anymore. The reason is not just the falling and the steady decline in the rates of fixed deposits, but also because the current inflation rate is hurting the FD returns even more as of today. Now, let us look at the current inflation that you and I are paying. For retail inflation, the consumer price index, it is at 6.95%. The wholesale price index inflation is at a record level of 14.55%. Now, in effect, when you compare this with your FD returns, there's a vast difference right there. Look at an example of SBI FD or a fixed deposit in the State Bank of India for a 1-year tenure. Now, there is a return of 5% or an interest of 5% that you earn on this fixed deposit. But in case you fall in a tax slab of 20%, this interest comes down to 4%. And in case you fall in a 30% income tax slab, then it further falls down to 3.5%, which means at the end of the year, you only earn an interest of 3.5%, keeping in mind your tax slab. Now compare it with the inflation rate as well. Now, a 5% FD rate as against an inflation rate of 7%. So, in effect, the real rate of a return on your investments in your FDs is negative 2%. That actually means that your wealth is, in fact, getting eroded by investing in fixed deposits. Let's take an example right here. In case you invest 1 lakh rupees in SBI fixed deposit for 1-year tenure, at the end of 1 year, you will obviously expect a return of 1,05,000 rupees. So, 5,000 rupees interest is what you will expect. But compare it with the inflation rate. Add to it this inflation, and then you will see your wealth getting eroded. Not just that 5,000 rupees, but an additional almost 2,000 rupees and more than that as well. So your initial capital, your initial investment of 1 lakh rupees is also further getting eroded by investing in fixed deposits as well. Let's move on and see what are the other factors that you need to remember here. Now, other saving options. It will be a better idea at this point in time to consider some better saving options which can help you beat the inflation rate. Look at an employee provident fund, which gives you a return of 8.1%. You can explore that. PPF gives you a return of 7.1%, so marginally higher than the current CPI inflation rate. So Kanya Samriddhi Yojana that you can invest in for your girl child gives you a better return of 7.6% as well. Other than that, you also have the senior citizen savings schemes as well. Now, this is applicable for people over 60 years of age, and then you can expect a 7.4% return, again marginally ahead than the inflation rate as well. NPS, which is the National Pension Scheme, definitely gives you 8 to 9% return when you compare it with the different schemes, be it corporate or government scheme right there under the NPS route. Now, hybrid funds, which will definitely give you inflation-beating returns of 9 to 12% as well. Remember, hybrid funds are those that invest in a mix of equity and debt as well. So overall speaking, blindly investing in fixed deposits right now, thinking that your money is growing, is a bad idea. Look at the inflation rate and see how your inflation is getting, your investment is getting eroded by just investing in that FD. You do need to explore more options, diversify your assets, and look for opportunities where you can actually beat inflation and therefore get handsome returns on your investment.
Another big business today exclusive. Support to cryptocurrency exchanges may have cost MobiKwik their license as a payments aggregator. Sources have told Business Today that the fintech major's application to operate its subsidiary ZakPay as a payments aggregator has been rejected by the Reserve Bank of India. The Gurugram-based company, which is planning a 1,900 crore rupee IPO, will not be able to onboard new merchants. Existing merchants offering ZakPay as a payment gateway will get 180 days to stop using it. Sources added that one of the key reasons behind the RBI's rejection could be MobiKwik's support to cryptocurrency exchanges via ZakPay. A response from MobiKwik is still awaited at this time. ICICI Securities plunged 6% in trade Thursday on the back of weak set of numbers. The company reported muted performance as brokerage volumes fell sequentially. We spoke to Vijay Chandok, MD and CEO of ICICI Securities, on the fourth quarter numbers and their outlook for financial year 23. Listen.
When you look at our overall performance, indeed, on a YOY basis, the growth has been quite strong, 33% growth on revenue, 29% growth on profits. Dissect it and you'll find that the growth has been across. We've been focused very strongly on diversification as a theme, which is playing out. You can see diversification on many parameters clearly visible, whether it is client mix, whether it is channel mix, whether it is revenue mix. And even within revenue, there is a lot of texturization of revenue that we have been able to deliver. So diversification as a theme has played out quite strongly. The second area that has played out is the fact that we have invested a lot in digitization and introducing digital properties and digital tools for our customers. Many of these digital tools are young in the market. This year, they have started scaling up. I think we could see traction emerging out of them. For example, we launched something called our Markets app, which along with that, for mutual funds, we launched Money app. Markets app focused on cash, equity, F&O, currency, and commodities. And Money app focused on mutual fund and other financial products.
Vijay, what's your sense of the markets? From what you're saying, you're sounding very optimistic on growth and are seeing, of course, tremendous interest in people coming online to trade. But given the context of inflation, rising prices, rate hikes, all in the background, are you convinced that we'll continue to see this momentum over the next couple of quarters?
So when you look at the fiscal year that has just started, I think it would be fair to say that we are entering that fiscal year with headwinds. These headwinds are coming from two forces. I think clearly the action that have happened through Fed and the consequent expectations of rate hikes that are more or less now certain that would play out during the course of this year. The high inflation that is running in global markets, as well as now cropping up in India, and there's also this issue which is in the domain of commodity prices going up, which are clearly fallout of, to some extent, what's happening in the Russia-Ukraine zone. All of these are definitely going to have some kind of a headwind impact on markets, and that's what is probably playing out already. It has surely created uncertainty on the IPO side. For instance, you would have seen market issuances, fresh market issuances clearly slowed down in Q4 itself. And it perhaps would continue in the early part of this year. So clearly, I think when you look at it from the here and now or the immediate future perspective, there are clear headwinds and there are uncertainties around all these domains and areas that you said. My optimism stems from the fact that as a head of a company, I'm investing for the future. The future is looking very constructive to me because we are going to see more participation in the markets in the medium term, more money flow into the markets in the medium term. And to harness that opportunity, there is a need for investment. And that's why, that investment I mentioned will continue from our side. Yes, there are going to be headwinds along the way in the short term, but I don't think that is going to dislodge the medium term story. To your point, whether there will be a meltdown, I really, we've seen volatility for sure. I don't know how you describe a meltdown, but volatility is going to remain. And we've seen, motion of the indexes from 18,000 plus to 15,750 and then bounce back and again retreat. So yes, I think clear volatility is there. Our house view is perhaps, that's the range it would operate at least in the immediate future.
And it's been a busy first day Thursday in India for British Prime Minister Boris Johnson. He spent the day Thursday in Ahmedabad, first meeting businessman Gautam Adani at Adani Group's sprawling office complex in the city. Later, he visited the factory of JCB Excavators, which have their roots in the port city of Liverpool. Boris Johnson announced a whopping £1 billion in trade deals which will create 11,000 jobs in Britain. Among the biggest instances of Indian companies investing in the UK are Switch Mobility, which will invest nearly £300 million and create 1,000 highly skilled jobs, and Mastech, whose £79 million investment will create 1,600 jobs in the United Kingdom. Other big Indian investors are First Source, Tech Mahindra, Emphasis, Bharat Forge and TVS Motors. Very quick break here on the Business Today show. Much more coming up on the other side. Stay with us.
No, she's not an actor or a fashion influencer. She is Pakistan's new foreign minister, Hina Rabbani. Hina Rabbani Khar is the latest addition to Pakistan's newly elected Shahbaz Sharif cabinet. She was sworn in as the Minister of State for Foreign Affairs of Pakistan. She is famous for her classy style and is one of the only 5 women on board Shahbaz cabinet. Hina Rabbani is often spotted wearing subtle shades of blue, beige and white. Her wardrobe has full-sleeve kurtas paired with chudidars and chiffon dupattas and lovely chikankari kurtas. She is not short of a beauty queen and has elegant jewelry. Her outfits are paired with pearl necklaces and studs apart from a few bangles and a watch. Her designer sunglasses and bags worth at least $9,000 have also been the talk of the town. On top of that, she complements her looks with subtle makeup, flaunting her natural complexion and jet black eyeliner. But enough about her style and fashion sense. Now that we have your attention, let us tell you about her take on foreign issues. This isn't the first for Hina Rabbani to be elected to the cabinet. She was the youngest and first ever woman to serve in Pakistan's cabinet. She was the 21st Foreign Minister of Pakistan from February 2011 to March 2013. In 2011, she came to India for peace dialogue and visited the shrine of Muslim Sufi saint Hazrat Nizamuddin Auliya in New Delhi. In the past, she also stressed the need to have a great relationship with Kabul as well.
Welcome back to the Business Today show. There's a bonanza in store for Air India employees. The recently privatized airline, now run by the Tata Group, is considering ways to soften the transition for its employees. Reports say the group may soon offer employee stock options or ESOPs to raise productivity and incentivize staff. Tata Motors is the only other group company to have an ESOPs policy. The airline has, in the past few days, announced a slew of HR measures, including restoration of salaries to pre-COVID levels and increased medical coverage. Well, nearly 3 months after its disinvestment, Air India is grappling with staff issues. The latest is a face-off in Mumbai, where airline employees have refused to vacate their company accommodations in the central locations of Kalina and Sahar.
Air India employees and their families protesting outside their airline colony at Kalina in Mumbai. Served with notices in October last year to vacate their government accommodation within 6 months, they are staring at a very real possibility that they could be homeless soon. However, a Labour court order to maintain status quo is in place, protecting their homes for now.
After privatization of Air India, there is an other issue of Air India employees colony which is here in Kalina. It's a huge colony and there are 950 families at this point who are saying and protesting that they will not be evicting the houses which have been allotted to them by Air India and they want to stay here till retirement.
There is a policy of 2016, housing allotment rules. In that it is clearly stipulated that you are allotted a house in the colony till retirement, death, dismissal or resignation. None of these apply to us, so we are lawful. We are not unauthorized tenants here. We are lawful and we have a right to stay till retirement.
The real owner of the land is the state of Maharashtra. It leased out the lands to Airports Authority of India, which set up colonies for Air India in 1955. The lease expired in 1990 without a renewal. Currently, about 1,600 families live in 4 Air India colonies. What is interesting is the large number of these employees are from 2 former subsidiaries of the privatized airline, Air India Engineering Services and Air India Airport Services. These were not part of divestment and still remain government-owned companies. These employees are questioning the eviction notice by Air India.
Not only eviction notices, the eviction notice says 15 lakh rupees fine and penal rent of 50,000 per month. In addition to that, the all admins have been requested to call these employees and threaten them that this action will happen, that action will happen if you don't go. I mean, this is unheard of in independent India.
A fresh twist is meanwhile creating turbulence for Air India. Mumbai International Airport Limited, now run by Adani Enterprises, has asked Air India to vacate nearly 750,000 square meters of land in the vicinity of the airport. This includes the 4 colonies and other land parcels being used for offices, hangars, sports clubs and warehouses. A formal notice was served on the 11th of March, giving the Tata-owned company time till 26th of April to vacate the land. With Mustafa Sheikh in Mumbai, Bureau Report, Business Today Television.
And finally, are you planning a much-deserved summer holiday this year? Well, there are, I have to tell you, these 5 challenges you're probably thinking of already facing. 1, airfares are already sky high. If you've not booked your seats yet, let me tell you, prepare to shell out a bomb for them. 2, hotel rates are already rising in anticipation of the rush expected this summer. 3, COVID cases are on an upswing. Nothing alarming just yet, but there's no saying when any potential clampdown could happen. Let's hope it doesn't happen. 4, school schedules, as you probably know if you're parents, are completely haywire this year and the traditional holiday dates are no longer applicable. And 5, despite all of the above, tourism is in revenge mode and we can guarantee you crazy crowds everywhere you could possibly think of going. So what do you do? Joining us live now to answer some of those questions, Himang Tripathi, president of Ease My Trip, and Devendra Parolekar, who's founder of Saffron Stays, are with us. Thanks very much, guys, for being with me. Himang, to you first, is it too late to book, the summer holiday that, people are probably wanting to go on, or do people have to compromise this time?
I think the summer season is just started and it's never too late to book your tickets. We understand that there are concerns regarding the increased airfare, but the demand has not gone down. In fact, the long weekends that we have witnessed, Good Friday as well as Holi, we have seen a jump of at least 50% in advance bookings. For hotel bookings, the jump is around 60%. So people are really interested. For the month of May and June, we have seen an advance booking of around 20 to 30%, reflecting a positive sentiment that people have for travel in India, which is domestic market, as well as for the international market. Now, for the domestic market, we have seen an increase and interest for locations such as Himachal, Kashmir, Goa, and Jaipur, Jaisalmer. For international destinations, places such as Dubai, Maldives, US, UK, and Australia are the top priorities.
Devendra, welcome. A difficult time as far as travel is concerned, but we're seeing people travel nevertheless. There are some challenges, but people are still going out there. Should people plan stays at regular hotspots in your opinion, or is it time to look at, newer, less traveled destinations? What do you think?
I think the space has witnessed in the last 2 years a complete roller coaster of sorts, and you and I are both aware of that. We started hearing about these rising COVID cases. It's not alarming as yet,
yeah.
But there are a few cases that you keep hearing here and there about. My sense is, I think that we as a nation, as a mankind, we have to learn to live with this virus now, and we have to plan our lives around this virus. Travel, entertainment, hospitality is all a part of our lives. We love to have these escapes as humans, and we can never get away from wanting to indulge in these escapes. So, as a sector, we have adjusted our sails, we have adjusted our cost structures, we have adjusted our ability to withstand these kind of roller coasters, and we've learned to live with this. So honestly, whatever comes our way, we are willing to accept and willing to work with them. Having said that, as customers, we noticed a very beautiful weekend that we all partied around in the last couple of days. The Easter weekend, the Good Friday weekend, right?
Yeah.
And we see one more coming around the corner, which is the Eid weekend. And of course, the monsoons will follow thereafter, and that will be a complete bonanza in some parts of the country. So you're going to see again, some sort of a roller coaster coming our way. Different pockets. So North is probably witnessing a boom right now. The West is seeing a dip. South is seeing a little bit of a boom. things will change very dramatically in the month of June, because June you will see west flower, north will probably start going down. So we've learned to adjust our sales in different markets depending on some of these seasonalities.
So Devendra, you're saying that it's not too late to book a summer holiday. There's still a lot of time. People have options.
People do have options. You just have to look a little, as you correctly said, look further away from the hackneyed, cliched destinations. Don't go after only the crowded ones. In fact, try and look for the, the nooks and the corners, and you will find some really wonderful properties. As Saffron Stays, we specialize in some of these nooks and corners, right?
Yeah.
We don't go after the mainstream ones.
And since you specialize in those, those destinations which are, not too far away, you're a good person to ask about this. One of the biggest components of a holiday are air tickets. Devendra, let's face it. Everybody's sort of, pretty terrified when they open travel sites right now and look at the prices of air tickets. How does one ensure that they don't break their budget? Does it mean, staying home, going to these little nooks and cranny places nearby? Is there a way around all these air tickets? Is it something that they can only solve a little later, wait for this storm to pass?
So absolutely, so most of my villas and vacation homes and holiday homes are driving distance from major metros. Right? So why take a flight and maybe even expose yourself to the risk? Why not just in your own bubble, in your own private vehicle, take your family or your families as a group of friends and escape to a nearby villa? You don't need to fly. And of course, it's very competitive as well. And it's very safe as well. So I think in these uncertain terms, I think the need to book a villa is very much there. And you just drive down to it.
Where are you going to be? Final question to you, Devendra. Where are you going to be holidaying this summer? Are you going to be going to one of your villas?
I would love to go to North in one of our beautiful villas in some of the upcoming destinations. The hills would be absolutely gorgeous at this stage.
All right. Have a great summer. Thanks. I'm sure everyone's listening, and be sure to check out, all these wonderful domestic destinations that we have as well. If those airfares are scaring you just a bit, it's not too late to book that dream summer holiday, no matter what you're thinking of doing. Devendra, pleasure. Thank you very much for being with me. That's a wrap on the Business Today show this Thursday. Thanks for watching. The news continues here on India Today.
Reliance's Mukesh Ambani is the owner of the second most expensive home in the world after Buckingham Palace. Here are the inside pictures of Antilia. Antilia is located in one of the most expensive residential areas in the country, Mumbai's Altamont Road. The property rates here are mind-boggling, 80,000 rupees to 85,000 rupees per square foot. A 600-member staff is employed to keep the 27-storied building in order. The building boasts of 3 helipads, Mumbai's skyline and the Arabian Sea. Antilia is built to withstand an earthquake of even 8 on the Richter scale. Mukesh Ambani's love for cars is behind 6 floors of Antilia being devoted to garages. This space houses several luxury cars, including his 5 crore rupees Maybach. The garage can accommodate 168 cars. There's even a service station on the 7th floor. The recreation center spread across 2 floors has a yoga center, dance studio, jacuzzi, a health spa and several swimming pools. Antilia is equipped with its own ice cream parlor, a mega temple, a private theatre that can accommodate 50 people and a salon. The Ambani residence has 9 elevators designed to take the residents to specific floors. All of this makes Antilia worth a whopping $2 billion. In Indian currency, it's about 14,000 crore rupees.
You are watching India Today.